Hello and welcome. You tune into Market Fatafat with me, Ankita Saxena, and with me today is Snehi Shah. Well, this is a show where we take you through all the stocks that are buzzing in trade today, either on the back of news flow or on the back of technicals. But look at the markets. What a sharp fall coming in. Sea of red, bloodbath in market today. In fact, Nifty is down more than 200 points. Nifty is below 22,000 levels, and
Absolutely.
Nifty Bank is also completely knocked down in trade today.
Absolutely, Ankita. Just like you mentioned, bloodbath across the screens and across the bourses today. Nifty down more than 200 points at 22,027 as we speak. At one point in the day, it was at 22,200 plus. But yeah, sharp fall coming in for the Nifty, 0.7% cut coming there. Sensex down 0.7%. Nifty Bank also down almost 0.8%. And when we look at the broader indices, Nifty small cap and Nifty mid cap are in sharper cuts compared to the Nifty. Nifty mid cap down almost 1.7%, small cap down almost 1.8%. So sharp and steep cuts coming in across the markets. Well, let's take a look at what is leading all of these drags then. And when you look at the Nifty 50 pack, Bajaj Auto, Apollo Hospitals, Power Grid, Maruti Suzuki, Eicher Motors, Adani Enterprises, Asian Paints and Tata Steel. These are the Nifty 50 constituents that are leading all of these falls. Let's take a look at the sectoral indices and how they are doing. And not to be too surprised, all the sectoral indices are in the red, led by realty, PSU banks, energy, auto and metal, biggest losers when it comes to sectoral moves. And when we look at it, the entire real estate pack also in the red, led by Sobha Developers, India Bulls Real Estate, Godrej Property, Oberoi Realty, all of them with cuts anywhere between 2 and 5%. And the second biggest loser, Nifty PSU Bank, the entire sector in the red again, led by Indian Bank, Union Bank, Canara Bank, Bank of Maharashtra, all again between cuts between 3 and 5%. Even among the broader markets, if you look at the market action coming in, sharp cuts coming in for Vodafone Idea after their fundraising was approved today. 12.3% cut there, Bliss GVS Pharma, PNC Infra, HFCL, GICRE. All of these indices bleeding in the red, anywhere between 5 and 12.5% of cuts coming over there. So, well, yeah, sharp fall coming in for the Nifty ahead of tomorrow's expiry, and no fresh triggers also being seen for any market recovery as of now. But Ajay Srivastav, CEO at Dimensions Corporate Finance Services, discusses the PSU sector and the scope the sector provides to investors. He also touches upon the banking and new age tech space. Listen in.
I think some sectors you have no choice but to go into PSUs, like defense sector. We don't have any big defense company in this country, at least this point of time. Some may emerge over time, a Bharat Forge may come in or a smaller setup may go. But if you want to buy defense, you have no choice but to buy the PSU companies. If you want to buy oil marketing companies, which have a huge reach in this country, you have no choice but to buy PSUs. If you look at power stocks at this point of time, the man who sits on the highest power capacity is a PSU stock. If you look at transmission companies, you don't have an option but to buy into a PSU transmission company because there is none which exists in the private sector. There's a REIT which exists in the private sector of transmission company integrate, but company don't exist. So, the debate whether we can buy or not is a choice that if you want to be in the sectors, transmission, defense, big power at the end of the day, you have, and say oil retailing. These four sectors, you have no choice. Yes, you have a choice to buy a PSU bank or don't buy a PSU bank. But if you look at these 4-5 sectors, you have no choice. So I think my guess is that these sectors will have just seen the first run-up after almost 2 decades. We have seen PSUs not performing for 2 decades or maybe more. So I think this is the first leg, and people have got really said, it's the new high. But I think it will go higher. I think PSUs will get more traction, certainly in the 5 sectors we have spoken about just now, because simply there is none which exist and there is no competition. And anybody from overseas wants to come into India in these 5 sectors has to go to the PSUs. So my guess is that these 5-6 sectors, including say power finance, that's a unique niche in this country, which again with the PSUs, you can't go anywhere else, PSUs. So you can pick and choose. You want to ignore the sectors? Sure. You want to be in the sectors? PSU is your game. And I think they will give a much better return because for one reason.
All right, but we'll bring in my colleague Vinny, who's standing by at the wall with what's happening in the markets. Vinny, not a very rosy day for the markets. We are completely bleeding. Take us through what are the stocks that are buzzing and what's really happening in the market right now.
So absolutely, we have seen a fall that has come in, a sharper fall, and right now when you look at the Nifty 22,000 levels, it's what it's managing to hold on to. At one point of time, it did slip below that mark as well. Right now, also down 0.8%. So from the day's highest point where we saw it start, and look at it now, clearly below the 22,000 level is just what it's managing to hold on to as of now. Let's pull up the broader markets. Let's talk about Nifty mid cap and small cap, because that's the clear underperformer coming in. Nifty small cap managed to open in the green this morning. A sharper fall came in. Look at the mid cap space as well, almost near the day's lowest point as of now. The small cap also from the green shifted to the red, down 1.5% as well. That's fallen by almost 2% from the day's highest point also. So clearly off the day's highest point is the Nifty mid and small cap as well. Let's pull up the Nifty bank and see what happened to that as well. Nifty bank is down almost 0.8% in trade right now, and that also is off the day's highest point. Right now it seems like it's trying to make a slight bit of an up move, but nothing that is happening in terms for Nifty bank as well. Especially when you look at banks like IndusInd Bank, that's down and out in trade, IDFC First Bank, AU Small Finance Bank. So the banking space has clearly seen some pressure. When you look at it in terms of Axis Bank, ICICI Bank, all of them down almost half to 1% as well. AU Small Finance down almost 1.8% as well. Kotak, HDFC not managing to hold on to some bit of a gain. Let's pull up Reliance and see what's that doing in trade as well, because seems like we've seen clear pressure that has come in all these top names as well. Reliance, clearly a heavyweight, is seeing a sharp drag today as well, down 1.5%. So that does pull down the market as well. Nifty down 0.8% because of that. Other than that, we have Bajaj Auto today among the top losers in the Nifty 50 as well. Bajaj Auto, Apollo Hospitals, Power Grid, Maruti, Eicher Motors. Clear pressure that we're seeing coming in the auto pack today as well. All these auto names are seeing a lot of pressure today. So putting an eye out on that. And as of now, when you're looking at all the sectors, they're trading in the red versus none of the sectors managing to hold on to green. Nifty IT in the morning was managing to hold on to some bit of a saving grace that we saw for Nifty IT. But as of now, Nifty IT also has given up those morning gains. Look at it on the charts, and trading at the day's lowest point is the Nifty IT as well. Let's pull up some bit of a green. Advance decline ratio, what I'm talking about, is clearly in the favor of declines as of now instead of the advances as well. Very few stocks that are managing to hold on to some bit of a green, and some of the stocks that are managing to hold on to green is something like a Max Financials. Then we do have Havells, Samil, that's Samvardhana Motherson, as well as Hind Copper, which are managing to hold on to some bit of a gain, and Shriram Finance also holding on to some bit of a gain. But other than that, Vodafone Idea, Z Entertainment clearly under pressure, Nifty Media, Nifty Realty among the top sectoral losers as well. So clearly you've seen pressure coming in the market, especially the banking side and the broader markets that have seen a sharper fall from the day's highest point as well.
Absolutely. So not a very healthy picture for the markets today. Thank you so much for joining us, Vinny. But tell you what, we are joined by Ashish Kyal, who's the founder and CEO of Wave Strategy Advisors on the technical side. And we have Lisa joining in from the research team to give us a lowdown of all the stocks that are buzzing in trade and the reasons behind. But to start the show, we have the first stock of the day is Vodafone Idea. Of course, Vodafone Idea has been in the news since Kumar Mangalam Birla mentioned that, the focus of the company is going to be on Vodafone Idea. And Vodafone Idea has finally received the board approval, to raise 20,000 crore rupees through a combination of equity and equity-linked instruments. And the board has also authorized the management to appoint various intermediaries, including bankers and counsels, to execute the fundraise. That's what the company said in the exchange filing. And the telecom operator will conduct an extraordinary general meeting with shareholders on the 2nd of April and seek approval for the proposed fundraising. Now, if shareholders approve, the company expects to complete the equity fundraise in the coming quarters. The promoters will also participate in the proposed equity raise as committed earlier. Now, Vodafone Idea, through a combination of equity and debt, the company is planning to raise 45,000 crore rupees. The company's bank debt currently stands at less than 4,500 crore rupees. On the back of this, we can see Vodafone completely knocked down in trade, taking it on the chin, down 12% in trade today.
Well, all right, with that, let's get a view on the technicals, and for that we have Ashish Kyal. Ashish, hi, let me come to you for TCS. Now, we did have a note that came in this week from UBS. They're setting the price target at 4,700. What's your target for this stock? And it seems to have done pretty well just over the course of the week. But other than that, not much happening over here. So what are you viewing on the charts for TCS?
Hi, afternoon to you and all the viewers. If you look at TCS, the overall trend remains positive. I think the stock can be headed towards the level of 4,300 over short term and possibly 4,700 eventually over the medium term perspective. And on the downside, the support for the stock is around 3,980 levels. So as long as 3,980 is intact, I think the volumes are picking up. The stock is bucking the trend in today's session also and managing to sustain in green. So overall outlook remains positive for the IT sector, and I think TCS is headed towards 4,300 over short term.
All right, with that, it's time for us to slip into a short break. But you don't go anywhere. Stay tuned for more stocks that are buzzing in trade.
Hello and welcome back. You're still watching Market Fatafat on ET Now. Ashish Kyal, I'm going to come back to you. Let's talk a little bit more about technicals. And the stock that you've picked out for us today is Max Healthcare. 6 months, almost 47% up, almost doubling in a 52 weeks basis. So what's ahead for this stock? Do you see any more rally?
See, Max Healthcare has shown a very classic flag kind of a pattern and is breaking out of the entire pattern. The overall pharma space is looking bullish, and I think the trend should continue on the upside for Max Health. Over here, we can expect a target towards the previous pivot high, which is around 910 levels. And on the downside, the support for the stock is going to be around 825. So as long as 825 is intact, I think the risk reward is favorable. We can expect a target of 910.
Alright, with that, let's shift focus from one healthcare insurance player to the other. Let's talk about Bajaj Healthcare, because that stock jumped as much as 13% today. It's been its highest intraday move since the 30th of August after the company said that it has signed contract manufacturing pact for the supply of 15 active pharmaceutical ingredients or APIs with UK and EU based customers. The pact will be executed through in-house R&D and manufacturing capacities, the company said in a stock exchange filing. So on the back of this positive news flow, stock continues to build momentum, up almost 15% as we speak.
Right, moving on, Ashish, coming to you for SAMIL, Samvardhana Madison International. What are you seeing on the charts in the last 6 months? A gain of around 20%. What is the upside for this?
Yes, the overall trend for the stock, I think, is going to be bullish. We can clearly see the stock has managed to sustain at the higher levels even today, despite of the broader selling. And the up move is associated along with the rise in the volume. So that's a very positive sign. We can expect a target of around 125 on the stock. And on the downside, one can maintain a stop loss for the stock around 114 levels.
Alright, Lisa, let me come to you now. Let's talk about L&T Finance Holdings. Why has this made it to your list and what are you pointing here?
Right, so it's on back of a brokerage note by Motilal Oswal. They expect L&T Finance Holdings to deliver a better execution, and that will be on the retail front, and this reflects on their 5-year strategy plans as well. The confidence also stems from the improvements that is being done across their sourcing, underwriting, as well as leveraging on their digital platforms as well as technology partnerships. Now, according to Motilal Oswal, they believe that L&T Finance Holdings can deliver a PAT CAGR of around 33% over the next 3 years and also will deliver an ROE of around 15% by FY26. And they have reiterated a buy rating on the stock with a target price of 200 rupees per share, and this is based on 1.8 times FY26 on their price to book value, and that is the reason why L&T Finance Holding is on my radar today.
All right, moving on to another counter that's buzzing away in trade, and that's Max Financial Services. And now this counter is up 4% today because on the back of the fact that Jefferies has come out with a note and they are maintaining a buy on the counter with a target price of 1,200 rupees. Now they feel that, the ramp up of the agency and collaboration that we saw coming in with Axis Bank is likely to aid growth for the company. They also see healthy VNB, CAGR of around 18% between FY24 to FY26. Also, they see the valuations for the company are very attractive at this point for a healthy growth. And on the back of that, Jefferies has maintained a buy on the counter and given a target price of 1,200 rupees. And on the back of that, the counter is soaring away, up 4.2% in trade today.
Alright, that's the fundamental on Max Financial. But Ashish, let's talk about the technical on the same stock. When you look at a 6-month performance, absolutely flat, no move. So what's your view ahead? What are you pointing on the charts for us?
Yes, in 6 months the stock has not done much, but if you look at the short-term chart, we got a very smart rally from the lows of 860 and the stock touched the high of 1000 level, post which we are seeing some kind of a consolidation. But today it is breaking out of that consolidation or a kind of a pattern And on the upside, the target for as per the pattern comes to around 1050. On the downside, the support for the stock is the gap area, which is at 940, and the risk reward looks very appealing if someone wants to create long positions. So I'm bullish on Max Financial, expecting a target of around 1050 on the upside.
Alright Ashish, thanks for that. Let's move on. Let's talk about why Thyrocare is up and away in today's trading session. Now shares of Thyrocare Technologies hit a 21-month high of as high as 722 rupees in intraday trade today, as it rallied as high as 12% as well. Has lost all of those gains but continues to still have a strong footing when it comes to the gains, up 7.3% as we speak. This after the company completed the acquisition of Think Health Diagnostic Private Limited. In an exchange filing, Thyrocare said that the company has completed this acquisition by purchasing 100% equity shares from all the existing shareholders, thus making Think Health a wholly owned subsidiary of Thyrocare. Now, with this acquisition, the company aims to enter into a new line of business of offering ECG testing services at home. This will allow the company to give its insurance partners a one-stop solution for blood as well as ECG testing, and will further deepen the presence in the pre-medical checkup, pre-policy medical checkup, and the annual health checkup market. So that's a solid news coming in for Thyrocare over there. On the back of that news flow, stock up 7.3% as we speak.
Well, then coming to you, Ashish, IndusInd Bank, the entire banking pack is under a lot of pressure today. In fact, even in the last 6 months, this particular counter hasn't really done anything, just a gain of like 3.5%. What are you penciling in for IndusInd Bank? Is it time that it should start moving up now? What is planned for the investors on the charts?
See, if you look at the short term, overall the selling pressure is intensifying on IndusInd Bank. So over short term, there can be a pressure, and we can expect the stock to move towards the level of around 1400 on the downside. On the upside, the major hurdle is going to be 1525. So unless the stock breaks above 1525, I don't think there is going to be any respite for the investors also. So 1525 is the major hurdle for the stock, and we can expect it to inch lower from here on.
Alright, that's the view, technical view coming in on IndusInd Bank. But viewers, with that, we'll slip into a short breather on this edition of Market Fatafat. More stocks and updates on the other side, so you stay tuned.